Hey everyone, Target reported quarterly earnings results that sent the stock price down almost 8% as of this recording. Now, I'll review Target's latest earnings figures, discuss why they sent the stock price down as much as they did, and then I'll update and answer if I still think Target is one of my top 25 stocks to buy and one of my top 10 dividend stocks to buy in 2024. That's right, coming into the quarter, I had Target rated as one of my top stocks to buy for 2024. It's been on that list all year long. So I'll update you if I'm keeping it there or if I'm moving it down, downgrading the stock because of these latest results. So let's take a look at the earnings first.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so first quarter comparable sales declined by 3.7% for Target, and that was in line with expectations. Target, remember, doesn't offer the lowest priced goods in its category. The leader in that category is Walmart. So Target has had a difficult time in the first quarter as consumers have become more cost conscious. They're looking to get more value for their dollar as inflation is bringing down disposable income. So that's the macroeconomic outlook. The macroeconomic conditions have not worked in Target's favor in the first quarter, but that's okay. I'll talk a little bit more about that a little later. Here's what I really liked about Target's quarter. Same day services grew nearly 9%, led by more than 13% growth in drive up. So Target's same day services are threefold, right? First, you could buy online and pick it up in store. That's one option. You have to get your items in the same day. The second option is you could buy it online, drive to a Target parking lot, and an employee will hand you your item while you stay in your car. That's the second one. The third one is you could buy it online and have Target deliver it to your house within a couple of hours, 1 or 2 hours, with its same day delivery service shipped, which you can pay a small fee for that service. So those three same day services have been incredibly popular ever since the onset of the pandemic. The one out of these three that I'm most bullish about is Drive Up, where you could buy online, drive to a Target store, and they'll bring it to your car, no extra charge. In this way, people can get their items faster than they can get them from Amazon or anywhere else, and they can get them conveniently brought to their car without having to get out of their car. And you all probably know how much Americans love convenience. They're willing to pay up for convenience. Target has delivered the best in class same day service. I follow many companies that have rolled out this kind of service, and Target's been the best in this category. That's the primary reason why I ranked Target as a top 25 and top 10 stock to buy in 2024, because of how they were able to turn their brick and mortar locations, which they have roughly 2,000 of in the US, into a competitive advantage. Now, because they're so close to so many US consumers with this convenient feature, they're going to win some sales away from Amazon. Not all sales, but some sales where people want these items much, much faster, and Target will win those sales. And I've seen the incredible popularity of this drive up service. It exploded during the pandemic and it's kept growing even in the aftermath of the pandemic, just to highlight how popular this service was. Now, Target highlighting that sales declines were primarily in discretionary categories, things that people don't need, but things that people sometimes buy just because, things like books and video games, televisions, board games, pajamas, things of that nature, right? Things that you don't need to necessarily buy. They're not things like milk and groceries and other essentials that you absolutely need, like soap and detergent and things like that, right? They're more, if you have extra money, you'll buy it, but if you don't, you don't need to buy it. And that's precisely where Target struggles, is in when people's discretionary income falls, which it has been falling in 2024, because inflation in essentials, people are having to pay more for things like rent, gasoline, utility bills, cell phone bills, etc. They have left fewer funds left over to spend on discretionary items. And so I want to differentiate these two. The same day services, the drive up, that is a long term competitive advantage. That's going to pay off very many years for Target, this convenient feature. Regardless of, you're noticing that here, regardless of the macroeconomic situation where sales are declining at Target, this particular segment is still growing because it goes beyond what people are feeling in the quarter in terms of their spending habits and spending ability. But the decline in discretionary categories, this is a short-term temporary thing, right? This is part of the economic cycle, which is always going up and going down and going up and going down. And this has been the economic cycle going back hundreds of years and will continue to be that way going forward hundreds of years. So as investors, we've got to separate the short term from the long term, and the decline in discretionary categories, that's a short term issue. The same day service, the drive up in particular, is a long term benefit that will pay off for many years to come. Target also saying that inventory at the end of Q1 was 7% lower than last year. That makes sense. I like that Target management is decreasing inventory as the macroeconomic situation is ebbing lower. You don't want to have more inventory. You want to have lower inventory because consumer spending is trending downward. Prudent management here from the Target team, and more evidence of Target managing the business effectively with these investments in their stores. Even before the investments in the drive-up feature, before that, they had made a several billion-dollar investment to upgrade their stores to make it more attractive for people to come into their stores. And that's proven to be working as well. So management expects the macroeconomic environment to improve going forward. For the second quarter, it expects 1% growth at the midpoint, and for the full year, it expects 1% growth at the midpoint. Now, that follows a 3% decline in the first quarter. So that means the second, third, and fourth quarter are going to improve as the year goes along. And you might say, wait a minute, the consumer situation is not going to improve as the year goes along. How is Target sales going to improve? You would be right. And here's what's going to happen, or here's what's expected to happen. Here's what I'm forecasting to happen as the year progresses from a consumer viewpoint. Consumers are shifting now, and they're ending that away from home spending pattern. For, I want to say, 2 years now, people were unleashing this pent-up demand to get out of the house, to spend money away from home on restaurants and travel and theme parks and bars, etc. But that's coming to an end very soon, in my opinion, maybe by the end of this summer, because the price of those categories has increased so much and people have spent more than usual in that category for almost 2 years now. People are now starting to say, all right, that's enough with that away from home thing. Let's kind of tighten our belts now and let's be smarter about our budget. Instead of spending $100 going out to the movies, why don't we just stick with watching some Netflix films this month? Instead of spending this much money traveling, why don't we do something else for entertainment? Or why don't we do something else for our vacation this year? Why don't we have a staycation instead? Or why don't we just visit local areas instead? So that's the reason I think Target's going to attract more consumer spending, is because consumer spending will go away from those areas where they've kind of spent more than usual these last 2 years, and it'll return back to a normalized spending split between goods and services. And if you're spending more money on goods instead of services, part of that budget will go to Target, and Target will benefit as a result. And finally, even though Target's sales fell, their operating margin came in at 5.3%, which was higher than 5.2% in the same quarter last year. So they were able to manage the business in a way that delivered profit margin expansion even when sales are falling. I like to see that from management teams, that they can see these kinds of sales declines coming ahead of time, and they can prepare the business for these declines by lowering inventory, as you noticed, by decreasing staffing, as they probably did. And even though sales fell, they still managed to improve profit margin. So while it's not great news that the company's sales decreased, the stock price fell as a result of less than stellar quarter for Target. The stock price is now down to $144 per share. It's up about 1% on the year to date so far. Target's trading at a forward price to earnings ratio of 13.7, which I think is still a cheap valuation for this well-managed business. So I will reiterate my recommendation for Target stock. I'm keeping it rated as one of my top 25 stocks and top 10 dividend stocks. Although if I was to say, did it move higher on the list or move lower on the list, I would say it moved lower on the list because of the near-term impacts of consumer spending. But overall, I don't think very much changed about my opinion of Target. In fact, I just got more reinforcement about my long-term thesis on Target's viability with its relationship with consumers and how much they love that buy online and pick up in store feature, and how much of a benefit that's going to be given their 2,000 locations and their proximity to consumers in the US. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.